Welcome to this video, and here we're going to take a look at one of the last screens in your budget, the profit and loss forecast. The good news is, if you've been following along with us, working away at your budget, then you've done 99% of the work. You've entered all your costs, all your sales, all that good stuff. Now, what the profit and loss is showing you is, if you hit your sales goal and you spend what you thought you'd spend, here's how much profit's going to be left over. And now we're going to pause, and it's critical that we pause here and make sure that we've got a good plan. LMN is going to use the numbers from your budget to help you price your estimates, or help your estimators price your estimates, to make sure that it's covering your real costs, your overhead costs, and all the profit that you want to make. So if your budget's not very profitable, or it's filled with mistakes, guess what? Your estimating is going to be filled with mistakes too, or your estimates aren't going to be made very profitable. So what you want to do, and what's so critical, is that here we pause and we try to get our budget to where we want it to be, nice and profitable. Now normally that's about a 10% net profit. That's a good fair profit. But in some industries, and I'll use lawn maintenance as an example because it's fairly true, lawn maintenance generally has a smaller net profit margin. We don't want it to be like that, but that's kind of the way it is in the industry. Margins are even tighter. And so you may find that to be competitive, you can't go for 10, but maybe you go for 5 or 7. Now, in other sectors of the industry, the profit margins are generally a lot higher. And so we can take that wherever we can get it. And hopefully when you put all your numbers together, you're there at a fair net profit. Let's take a look now at the net profit screen for a second. So this is called the profit and loss, and you can get there by clicking the profit and loss tab here in your budget. All the profit and loss screen is doing is take all the numbers that you've put in already and sticking them on one page and showing you a summary of the math. So here, for example, net income is how much money I'm going to take home after all my sales and all my expenses are paid. My profit margin is the profit margin that equals that net income. So here I'm looking at a company that stands to make $53,000 if everything I've entered here happens, which is about a 4.3% profit margin. It's not bad, I'm profitable, but I'd probably like to get it better. Down here, you're looking at a summary of all the costs you've already entered. So sales is telling me I'm at 1.24 million. Now I can't change it here. If I want to make a change, I've got to change my sales budget. But you can just click the edit button and you'll jump to your sales budget where you can make changes. Same thing with any of the other budgets over here. These numbers are coming from the budgets we built earlier. Field labor wages, field labor burden, equipment costs, materials, subcontracting, equipment rentals, overhead equipment, overhead payroll. And then it's giving you my net profit. So all it's doing for net profit is saying the sales that you forecast minus the job cost that you forecast minus the overhead that you forecast is going to leave you with this much net income. Now, if you're staring here at a number that you're not really happy with, welcome to the club. Most landscape companies, the first time they go through budgeting, don't find themselves in a very profitable position. You should know this. Most of the industry doesn't find itself very profitable. And it wouldn't take long to figure that out if you talk to 20 random landscape contractors. So while it might be normal, it's not really a good spot to be in. So here's where I want to pause, and I want to fix my budget so that I have a profitable picture. And what we'll do now is go through some of the ways that you can fix your budget to get there. In a nutshell, there's 4 things you can do to get more profitable. You can reduce your costs. It's not easy to just reduce costs. It sounds good in theory, and it is easy in theory, but doing it in real life is a whole other thing. But basically, reducing costs will help you hit the same sales goal with less costs, and the less costs you have, the more profit you'll have at the end. You can also do more work, which is you can do more jobs with the same overhead. It'll spread your overhead out across more jobs and have more money left over at the end of the year for net profit. You could also get more efficient, or you could charge more for your work. Now let's take a look at each one of these in a little more detail and show you what they really mean and how to make your budget do these things. So we're going to start with reducing costs. One of the ways you can get more profitable is to leave your sales alone, but reduce some of the costs you have put in. The first reason to reduce costs is highlighted on the screen there. You're going to want to take a look at each budget, first of all, just for data entry errors. You'd be surprised how often this happens. Sometimes we're helping somebody look at a budget and we look at a number and says, wow, that's a big increase. Oh, shoot, I just made a typo there. Meant to be a 6 and I typed a 9, whatever the case is. So first go through your budget and look for data entry errors. You can also look at your budgets and look for things that you may have double counted. Pay particular attention to the overhead budget. In your overhead budget video, we walked you through some of the costs that most often get double counted. So review those. You may find yourself that you've entered it twice. Entering your budget, especially the first time, can be complicated. It's pretty easy to accidentally enter fuel in equipment and then fuel again in overhead, just simply because you forgot. So just go back and double check and make sure, especially looking at that overhead help video, that you didn't double count any costs. If you don't think you made any errors like that, then you need to look at where are your costs high. You could look at your cost of goods sold and you could look at your overhead costs. And you want to ask yourself which one of those costs are higher than industry average. Now remember, each budget screen had an industry average up there in the top right. So you can kind of compare your budget along the way to see where you're appearing normal and where you're appearing high. Here's the methods you're going to want to use to, in your budget, reduce your costs. Now these are pretty straightforward. You have the choice of reducing field labor hours. So do the same sales with less hours. You could reduce field labor staff. Sometimes you may realize that I should hit this sales goal with one less person, maybe even more for big companies. You could reduce things like equipment repairs. Now, it's one thing to just reduce your repair budget, but what I really mean here is you might need to buy newer equipment so that your repairs are less. And it may be cheaper to pay a little more on depreciation to pay a lot less in repairs. You could also reduce your material costs, but only if you think there's a bunch of waste and inefficiency in there. Don't be artificial about this, and this necessarily might not be the exact thing to do for you. Your budget may be not profitable for other reasons, but one thing you could do is reduce material costs. And then finally, you could reduce your overhead. So especially if your overhead's higher than average, you might want to reduce your overhead, or maybe you don't want to do any of this stuff. Maybe you say, I can't cut staff or overhead or materials. They're all pretty realistic. And if that's the case, then just stick with us. We've got 3 more strategies to help you get more profitable. The second strategy is to do more work or do more jobs. If you're looking at your budget and you're saying, yeah, this is realistic, this is everything we actually spent and what we need to get there, then you might need to find that you may need to do more work. Now, this is common for companies who are small. So a pickup truck costs a small company and a big company about the same. So if you think of the owner's truck, it's going to be a lot more expensive for a small company, for the owner to have a truck in the business, than it is for a big company to have an owner have a truck in the business. For a company that's doing $300,000 in sales, a $40,000 truck is really expensive. But for a company that's doing $12 million in sales, a $30,000 or $40,000 truck is relatively insignificant in the big picture. So sometimes small companies have a lot of overhead because they just haven't grown into the overhead that they have yet. Things like trucks and maybe an office and eventually more people for the office and all that sort of thing. So another thing is if you're coming off a recession, commonly after a recession, you'll see companies that used to do, say, $1.5 million in sales, now looking at, say, $800,000 in sales. They've lost a big chunk of their sales. But very often what happens is these companies' overhead expenses are still just about the same as they were when the company was $1.5 million in sales. But now you're only doing $800,000. So overhead's a much bigger chunk of those sales. If you're coming off a recession, you may find that you need to do more work as quickly as possible because your overhead is big enough to support more work, and you need to get that more work to make your overhead a smaller percentage. Now, thirdly, another reason that companies have high overhead or need to do more work is if they recently made big overhead investments. So you might be a single owner operator and hire your first salesperson, designer, or office manager. Well, before you hired them, you were probably making a decent profit. But now that you've hired them, what was profit needs to pay their wage. So to make your overhead fall back into balance, you need to grow your business big enough so that that wage goes back into the proportion it was. For example, if your overhead is 25% of your sales and you hire somebody at $25,000 to work in the office, just a quick little bit of math tells me I need to grow my sales by $100,000 to justify that $25,000 office hire. because if our overhead is 25% of our sales and I'm going to add 25,000 to overhead, I'm going to need to add 100,000 in sales to make that $25,000 salary 25% of our new sales figure. It's not always that black and white, and you can't always do that in 1 year, but roughly that's how you can look at things. Now, another big overhead investment for a larger company might be, hey, you bought a new shop and yard. And it might be a really significant investment up front because you're probably building it to expand and accommodate future growth. So if this is the case, you may find that your overhead is high for a year or two, maybe even more. But ultimately, your job is to grow the company as quickly as you can into that increased overhead so that you bring your overhead back down in line with a normal average. So to fix a company with high overhead or a company that needs to do more sales, here's what you got to do. Increase your sales goal. That's doing more sales. But if you're going to do more sales because you're doing more work, you also need to increase the expenses to do that work, which means you need to increase your job costs. You'll have to increase labor hours. Maybe you'll need to increase your equipment if you need to buy more. You'll increase materials and you'll increase subs, possibly if you sub out the work. Just don't increase your overhead. In your budget, that's how to simulate doing more jobs or more sales. You basically have to increase everything except for overhead. Now, the third method is a much more preferred method, and this is a company getting more efficient. Just about every company watching this video is going to have productivity problems or efficiency problems. Day after day of mistakes, broken tools, forgotten materials, bad organization, doing things on the wrong days or in the wrong order, and ultimately it costs us a lot of money. But more importantly, it costs us a lot of billable opportunity. Let's say we lose 3 hours of foreman time because somebody forgot a tool back at the shop. The foreman stops what he's doing, tries to give the guys some direction, jumps in the truck, drives back to the shop, tries to find this tool, then gets back in the truck, drives all the way back to the job. Well, while that foreman blew 2 or 3 hours of time driving, as soon as he left the job site, the crew probably slowed down. And so the foreman lost 3 hours. The crew probably worked at half speed, meaning I lost another maybe 3 hours of man hours of work. And now you've lost 6 hours. And in 6 hours, if each person was going to be doing, say, $100 an hour of total revenue, it cost yourself $600 to go get the tool. And that's what we mean by getting more efficient. Some of the biggest reasons why companies aren't as efficient as they could be are as follows. Number one, they're not really tracking job hours, or even worse, not estimating job hours. Just throwing your crews out there and hoping you're going to be profitable is a recipe for bad efficiency. You may also have too much loading, unloading, and driving time, or too much unbillable time. You need to reduce mistakes, reduce your forgotten tools, and reduce rework to improve your efficiency. You could also plan and prepare your jobs better. The crew gets ready in the morning, drives to the site, arrives at site and unpacks all their tools, only to actually see the job for pretty much the first time and then realize the first thing they have to do is turn around and drive back to Home Depot to pick up a bunch of materials. If that sounds like you probably need to prepare or plan your jobs better. And finally, one of the other ways you can get more efficient is by using more equipment and less labor. Now, how do you do this in your budget? Number one, you can increase your sales forecast. Don't touch your labor cost. What we're saying by getting more efficient is you're going to do more jobs in the same number of working hours. Number two, don't touch your equipment costs either. You're going to do the same number of jobs with the same crews and equipment. Number three, increase your materials. If you're going to do more jobs, even if it takes you the same amount of time, you're probably going to need to buy more materials for those jobs. So if you grow your sales by 5%, then make sure you go grow your materials by 5% too. Also, don't touch your subcontracting costs and don't touch your overhead costs. Getting more efficient doesn't have anything to do with those. What we're going to say is we're going to do more jobs with all the same costs except for materials. And it's really easy to increase those things in your budget to show yourself getting more efficient. Just about every company can get more efficient. So this is a great strategy to help yourself get more profitable. Now, the last strategy is to just charge more for your work. If you've been watching these videos and wondering if you're charging enough for your work, if you're winning the right kind of jobs, if you've really been recovering all your equipment costs or your overhead costs, or even if you've been estimating enough hours on your jobs, then there's a good chance that you've won a bunch of jobs that probably weren't priced enough or for your work. That's a really easy one to fix. All you need to do is go in, increase your sales, and don't touch anything else. If you're going to charge more for your work, we're not saying increase your costs at all, just increase your sales. Now, this is a really applicable strategy for companies that find themselves at like 6 or 7 or 8% net profit and feel like they've done a good job on their budget. If that sounds like you, but you want to get to 10%, then just do this. Go back to your sales goal and increase it until it says 10% net profit. It sounds too easy, but look, think about a job. If you priced an estimate and you priced it at making 5% net profit and your boss tells you, I want this at 10% net profit, then what you're going to do is just increase the price until it says 10%. Well, that's all we're doing here with the budget. We're just taking a whole bunch of jobs at once, your entire company. We're not touching the cost. We're not changing any of that. We're just going to increase the price. And little changes to your sales goal, when you spread them out over all the jobs you're going to do each year, it actually probably will make a very, very small difference in what you actually price your jobs. So if you find yourself close to the profit margin that you want, just not quite there, and you feel like everything else is done right, then just go in and up your sales until your net profit margin says 10%. Now you got a budget that says 10, and then let LMN worry about the math that'll help you get there. That's the great thing about LMN. What it'll do is after you get your budget profitable, it will take your estimates and say, okay, this is what a crew costs. This is how much overhead this company needs to hit. And this was their sales goal, so I need to add this much net profit. Your budget in LMN isn't just a way of saying, oh, this is what we should spend and this is what I hope to spend. Your budget will actually price jobs to help you get there. It's kind of like a self-fulfilling prophecy. You put your numbers into it and it tells you how to price your jobs to get there. You price your jobs the way LMN says, and before you know it, at the end of the year, you're probably going to find yourself very close to what you wanted to get to in the first place. It's not dumb luck. It's not because you just happen to guess right. None of us are a psychic. It's just math. You put your numbers in, and as long as you price your jobs according to the numbers coming out, you're probably going to hit your sales goal. Now, of course, you got to hit your sales goal, and you can't overspend on two of the biggest things, labor and overhead. If you can sell as much work as you budgeted, get it done in the hours you budgeted, and not overspend on overhead, there's an excellent chance you're going to hit the net profit you're hoping for. And that's way better working from a plan for profit than simply putting your head down at the beginning of every year, working hard, and hoping that you're going to have some money to take home. At LMN, we offer our users budget reviews. Sometimes you'll get a budget, you'll enter your numbers, things will work out good, and you're ready to move on. And if that's you, fantastic. However, for many companies, they'd like a little help. They'd like somebody to take a look at their numbers, or they don't know where to fix their numbers. Now, we're not accountants, we're not professional advisors, and we can't offer, quote, professional financial advice. But what we can do is take a look at your budget with you, and based on the thousands of people we've spoken to in the past, help maybe point out some things that you should look at or some strategies that'll help you get more profitable. If this is something you'd like, feel free to reach out to us at support@golmn.com or through live chat and set up a time with us to maybe go through a webinar and review your numbers and talk about any questions, problems, or misunderstandings you might have. And we'll see if we can't help get you on the right path to having a prosperous next year.